Welcome to Explain the Charts, where we break down the markets and help you understand the story behind the charts. Today, September 9th, 2024, we're going to be talking about GBPUSD, the British pound to US dollar exchange rate. We'll be examining the latest news and events impacting the market, and then diving into the chart data to see what it tells us about the current market sentiment and potential future movements. First, let's take a look at the current news surrounding GBPUSD. Recent news has focused on the waning odds of a large rate cut by the Federal Reserve, which has been putting bearish pressure on the GBPUSD pair. The euro, on the other hand, has been weighed down by expectations of a rate cut by the European Central Bank. This divergence in interest rate expectations has benefited the US dollar, preventing the GBPUSD from gaining traction despite improving risk mood. While the news seems to suggest bearish pressure on the GBPUSD, let's delve into the charts to see if they corroborate this sentiment. Now, let's switch gears and examine the GBPUSD on the daily chart. We can see a clear trend of higher highs and higher lows, indicating an overall bullish trend. However, the most recent candle closed below the previous candle's close, which could be a sign of a potential reversal. Looking at the past few months, we can observe a clear support level around 1.2500 and a resistance level around 1.3200. It's important to note that the GBPUSD has remained above its 15-year consolidation, which suggests that the pair is likely to find support at lower levels. This suggests that even if there is a reversal, it may not be a drastic one. The current price action is hovering around the 1.3100 level, and we can see that the pair is close to its 100-period SMA. The RSI indicator on the 4-hour chart stays near 30, suggesting that the pair is close to becoming oversold. Let's zoom in on the 1-hour chart to gain a more granular understanding of the GBPUSD's recent movements. We can see a series of smaller candles showing a more volatile and choppy price action. This suggests that the market is unsure about the direction it's going to take, which is consistent with the news about the mixed economic outlook. We can see a couple of potential support levels, one around 1.3040 and another around 1.3000. These levels are also significant because they align with Fibonacci retracement levels and the 200-period SMA. On the upside, the next resistance level to watch is around 1.3130, followed by 1.3150 and 1.3200. These levels align with Fibonacci retracement levels and the 50-period SMA. The 1-hour chart seems to be a bit more volatile, but the overall trend still appears to be bullish, with the pair finding support near the 1.3000 level. However, the recent bearish pressure from the news about the Fed's rate cut could be pushing the GBPUSD downwards. Let's now move to the 15-minute chart and focus on the most recent price action. The 15-minute chart is very volatile and shows rapid fluctuations in price. This volatility is likely driven by the short-term market sentiment and trader reactions to news events. We can see a series of whipsaws and reversals, making it difficult to identify a clear trend in the short term. However, we can see a potential support level around 1.3100, which coincides with a recent trendline. On the upside, the next resistance level to watch is around 1.3200. This level coincides with a previous high and a psychological level, making it a significant resistance point. The short-term volatility on the 15-minute chart makes it challenging to make any definitive predictions about the GBPUSD's immediate direction. However, the overall trend on the daily chart and the recent price action suggest that the pair is likely to find support around the 1.3100 level. Now, let's summarize what we've learned today about the GBPUSD. The news seems to suggest bearish pressure on the GBPUSD, primarily due to waning odds of a large rate cut by the Federal Reserve. However, the charts show a more mixed picture. The daily chart indicates an overall bullish trend, but with signs of a potential reversal. The 1-hour chart is more volatile but still suggests a bullish trend with support near 1.3000. The 15-minute chart is very volatile, making it difficult to make short-term predictions. The important levels to watch are the support level around 1.3100 and the resistance level around 1.3200. These levels are significant because they align with Fibonacci retracement levels, SMAs, and psychological levels. If the GBPUSD breaks above the 1.3200 resistance level, it could indicate a strong bullish move. Conversely, if the pair breaks below the 1.3100 support level, it could signal a bearish trend. The likelihood of these events happening will depend on the news and economic data releases, as well as the overall market sentiment. Keep an eye on any significant economic data releases, such as the US CPI report and UK employment numbers. These data points could have a significant impact on the GBPUSD's direction. Overall, the GBPUSD market is currently in a state of uncertainty. The news and economic data releases will continue to influence the pair's direction, and it's important to stay informed and adapt your trading strategy accordingly.